Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Monday, April 3rd. We are coming at you at the first trading day of quarter two and April. So the end of May was both the end of the month of May and also the end of quarter one. So we are now in quarter two. And we have a brand new month and a brand new week. So it's a big party on April 3rd today, and the market is basically setting itself up for what is to come over the next 3 months. And of course, typically United States finances works in a quarterly fashion. So you will see, month over month fund rebalancing, but you'll also see quarter over quarter fund rebalancing because, progress and success is tracked on month over month and quarter over quarter. So significant day. We have seen historically a lot of spikes of price action into early quarter closes. So nothing unusual about what we saw, previous month. Let's just kind of zoom out a little bit. Obviously, pretty bullish headed, at the end of March, but, it still could not breach the February highs. So, relatively bullish, Q1, but, let's see how Q2 plays out, because the fact that we could not break the highs of Q1 or get back above where we were in August 2022 certainly worrisome. But still a lot of trading to be had, and we have a very large range kind of formed here. So let's dive in and see what is to come. So looking at DXY, we are more or less the same price as when we talked late last week. DXY actually rose yesterday, and I guess actually something that I didn't preface before is the oil news. And so in relation to what we're looking at here is, obviously, if you didn't read the TTC newsletter or keep up with the news cycle yesterday, is OPEC announced a 1.1 million barrel a per day reduction in oil supply. So that is, that shocked the markets. That lifted oil. Crude oil went up 7% yesterday, and obviously the dollar, shocked higher, had a swing failure pattern, and is now lower. So very interesting that it had a swing failure pattern above, the resistance that we had lined out around 102.5, and has now head lower. It's now sitting at the 102 level. So if we break below 102, that's headed down to 101. If we hold this, then we are back, to this resistance level. Obviously, if DXY goes down, would expect risk to have a fun day. If DXY continues to go higher, risk is obviously not going to have fun. So the thing with the oil situation is not exactly something that you can point to and say it's going to affect the market this way. But the general idea is that if energy prices are higher, that may, hurt, decreasing inflation, which may keep inflation higher, which may, force central banks around the globe to do more, which would then, be bearish, and which is why we saw bearish price action on that news yesterday, and why we saw the dollar rise. Now everything is kind of reset, and where, Bitcoin got back to 28.5 this morning. Equities, continued higher towards 41.30. So, very much a lot of volatility on the heels of that oil news. I would expect, the oil situation to continue to creep in, but it does appear that it's, less of a focus this morning, considering we also had PMI, which was slightly less than expected as well. And it was playing into some of the volatility this morning. So no clear read from the oil news except the immediate, a reaction. And the general consensus is that if oil prices rise, that's probably going to be bad, because energy prices are rising, and then it hurts, both, the production of materials, and then obviously it trickles down to higher prices on the consumer. So very much something to consider in the short term. Looking at equities, just looking from the daily perspective, definitely worrisome that we're seeing kind of this, this doji form at the top here. We definitely do not want that. It's certainly not the worst signal in the world, considering the bullish trajectory. But typically when you see this, a pullback is happening. Last doji we had was on the March 6th after a nice rise into resistance. And then we pulled back, pretty harshly, actually, from 40.60 all the way down to 3,800. So if you are planning on a pullback here, you would probably be at least expecting, 4,000. And then if it breaks below 4,000, you've got a lot of room here. And obviously this, the 1 day estimated 200 moving average, very important where the estimated 200 moving average on any time frame, in my opinion, is very important. But as you can see here, it's been unable to claim to actually break above the 200 the 200 estimated moving average. It's been unable to break above that and hold it. As you can see, broke above, had a slight test here, traded above it for a couple of days, trickled down, swing failure or in deviation here. Now we're back above it. We have not retested it yet. So it clearly needs a retest. It's been unable to actually cleanly break through multiple times since early 2022. So something to worry about there if you are a bull is that, we need a clean break above this. We've not gotten it yet. So looking at the hourly perspective, I think, trading is very simple. The resistance is up here at around 41.40. Seems that 41.30 is kind of where it got cut early, but we're still above the weekly VWAP. I'll go ahead and just kind of zoom in because I know it'll get a little bit blurry on YouTube, but this blue line, weekly VWAP, we're still above the weekly VWAP. We break below the weekly VWAP, I have a feeling that we will end up trickling down to, 40.60 for then, potential rise back up. Or then, 40.60 becomes, a support that we break through. Then we're back to 40.10, which brings us down to the 4K level, which also coincides with the 4-hour estimated 200 moving average. So you have support here at 40.10. You have the 4-hour estimated 200 moving average at 4K, and you'll have the 1-day estimated 200 moving average sitting at 4K. So a lot of confluence at 4K with a doji forming, hovering above the weekly VWAP. So if we break below the weekly VWAP, good short down to 40.60, plausibly all the way down to 4K. Looking at Bitcoin, I think very similar outlook. The one unfortunate thing that we talked about is that, of course, equities broke higher, which we can see here. Broke above this resistance level. Bitcoin wasn't able to. So on Friday, heading into the evening, we did have this small spike up to 28.8, quickly sold back down. That was, the play that I was expecting for the weekend was us to break higher. It sold off. Therefore, and I told the TTC community this morning, the fact that, typically you will see that lag, and the fact that, our lag, the lag from crypto following equities has been so delayed. The one follow through that we had was quickly rejected, and we've been unable to break above 28.6. Definitely a cause for concern. Doesn't mean that the rally is over or bullish momentum is gone, but it certainly is an indication that it is waning, and that the correlation or the lag in terms of crypto following equities may just never come through. It may just be, the longer it's delayed, the less likely it is to come to fruition. And I think that's kind of the general consensus here, is that considering how long it's taken, we didn't get any boost over the weekend. We didn't get any boost early Monday with equities still breaking above highs. That's an extreme worry. So we are above the 1-hour estimated 200 moving average. We're now below the weekly VWAP. And of course, being below the weekly VWAP is not a good sign, but we did survive it yesterday. So the fact that we're above the estimated 200 moving average in the 1 hour is a good sign. So if we can stay above 28K, then you can get back to 28.6K, potentially break that higher or reject. Below 28K, you are back down to probably the 27.6, maybe 27.5 level. And then if you break below this, you're back down to the 26.6 level. And in my belief, if equities break below the weekly VWAP and start heading down to 40.60, potentially 4K, I have a feeling Bitcoin will at least head down to the 26.6 level, which has been support for several weeks now. So, and break below 26.6, you obviously, by the time it makes it there, I would assume that the estimated 200 moving average in the 4-hour kind of catches up to this 26.6 level. That would be a pretty good bounce, or it will then break through and then head back to this range right here with support at 25 and then support at 24. So that's, pretty simplistic outlook there. And I know, you might say, well, Nick, equity or crypto wasn't really following equities up. Why would crypto follow equities down? Well, they typically still follow the same movements, and Bitcoin did try and follow equities. It was just rejected. And now is able to break above the highs. And if equities, swing failure pattern or deviation above the highs and heads back down to, mid-range or low end of the range, then you would expect Bitcoin to probably head down to mid-range or low end of the range as well. So of course, this is no perfect science, and the trade higher on Friday did work if you caught it early, but it really was not the best trade, and we've only grown a bit weaker since then. We're still sitting in this this range with 27, mid 27 as support and mid 28 as resistance. But if equities grow weak, then we have to also consider the fact that crypto may also follow them to the downside, whereas it tried to follow it to the upside. And of course, the other side of that coin is crypto's been so tight trading that we have to also respect support at 27.5, meaning if we get down there, that's potentially a good long area, as it has been since last Thursday. And before that, if you were shorting support, you didn't really have too much fun. And obviously, if you've been longing resistance, you're not having too much fun either. So might want to just short resistance and long support until that changes. And my main sign is judging of how we respond to both the estimated 200 moving average on the key time frames, 1 hour, 4 hour, as well as the weekly VWAP, which we're currently trading under for Bitcoin and just above for equities. So I think that'll be very key in terms of trading. And again, if you've been watching me trade, estimated 200 moving average, VWAP, very core areas, are very core indicators. And then beginning of the U.S. session, which is 9:30 a.m., and then the end of the crypto daily, which is around 5 p.m. Eastern, are my favorite trade areas, because that's when you get the most volatility. So because if you traded the open today, you got a little bit of bullishness, and then then we've just been trickling with ugly volatility, and then I'm sure we'll get some more volatility at the close today. So if equities are beneath the weekly VWAP by 5 p.m. Eastern today, then maybe Bitcoin slides beneath the weekly VWAP and trickles back down to 27.5 or lower. If equities are above the weekly VWAP by the time crypto closes for the daily, maybe we get another try at the highs again. So timing your trades with when volatility occurs in reference to larger price action is really the best way to trade, in my opinion. So looking at ETH, it's obviously going to be very similar to Bitcoin, but just so we're clear, ETH BTC still trading underneath the resistance level and has still been unable to break above. This is very worrisome. The longer it takes, the less likely it is to actually break above. So in my opinion, ETH is still going to be weaker than Bitcoin until that changes. And just looking at price action above the 1 hour estimated 200 moving average, very similar to Bitcoin, sitting right around support, very similar to Bitcoin. And so if we break below estimated 200 moving average, we're probably headed back down to the 1770 level, maybe 1760. Stay above the 1795 level, then you've got a chance to head back to maybe 1820, flip that, and then head obviously to the highs for potential rejection. So it could get rejected here. If you make it up here, it could get rejected there. And then if you don't get above, if you can't stay above the estimated 200 moving average, then down here, and then potentially down here. So it's going to be tight trading unless something crazy happens. But typically, moral of the story has been long 1770, short 1840. Until that changes, we just that is the trade. So I don't want to overextend anybody or get anybody too excited for any trades. The data prints this weekend or this week will be weird. PMI was more or less even. But ISM manufacturing was down, and construction spending was also down. So definitely showing a bit of a slowdown in production. We have ADP employment, which is a precursor to the big number, which is employment this week. So ADP employment, jobless claims, these are both precursors to the Friday number, so they could influence momentum. But the big number is the unemployment report. So I hate to say this because this is the market's opinion, not mine, but the market wants unemployment number. The market wants the unemployment report to come in lower than expected, because then that would be less jobs created. And they want the unemployment rate to come in higher than expected, because that would obviously imply higher unemployment, which is what the Fed wants. And we obviously want hourly wage inflation to decrease, which is it is expected to year over year. A month over month would be a big 0.2%. We don't want that to rise at all, although it would come down year over year. So Friday is the big number, in my opinion. We basically want employment report to come in less than expected. We want unemployment rate to come in higher than expected, and we want hourly wages to come in less than expected. If that happens, then the market may rally Friday into the weekend, because again, Fed has two mandates: inflation and unemployment. Unemployment going up helps inflation going down, and it pleases the Fed and may imply a topping of the federal funds rate sooner than expected. Right now, the markets are expecting a 60% chance of a 25 basis point hike in the next FOMC meeting. That may decrease if unemployment goes up and inflation metrics go down. So that is something to look for in terms of the bullish indication for the week. But I would expect, some bearish volatility for this week based on how equities currently look, based on the OPEC announcement early this week, and based on the fact that early indications show production slowing down. All eyes will be on the employment report this Friday for potentially good news or exacerbation of bad news. So good luck, happy trading. And again, if you're not in the TTC community, you're missing out on all of the alpha. We post daily research every single morning for equities, the dollar, Bitcoin, Ethereum, and other trades that pop up. All of them are actionable. All of them are, based in a way that you can make decisions for yourself using the information in the morning, afternoon, and night. We always follow it up. So if you're not in the TTC community and not getting, the early morning trades, you are missing out every day. Our members love it. So good luck, happy trading, and of course, see everybody tomorrow.